Hey everyone, hope you're well. Just a quick video about the property market. So today it was announced by the RBA that they're going to put that cash rate on hold. Yahoo, I can hear a lot of people screaming out there. So it is sitting at 4.35%. Most interest rates from banks around the 6, 7, 8% is what you'd be looking at. So look, it is hard for some out there looking to purchase. Borrowing capacity has been reduced. But what the market's doing, it's a bit of a double-edged sword at the moment, it seems, across the country and locally here for us on the Sunshine Coast as well. And I just want to share with you some interesting charts I've just had a look at myself. So I'm just going to share this screen here. And this one, first and foremost, is about the shortage of properties. It's probably going to last a couple of years. But let's just jump over here first and foremost and have a look at the property prices as of the end of November. I'm just going to scroll down here, and these are the property prices changing throughout the years. Now, generally, you see at this time the property prices do start to slow, transactions do start to slow. However, we've seen a less busy market compared to what I've experienced in past years here on the Sunshine Coast. But Sydney certainly has followed a fairly good trend, but it has dropped off significantly in the last month. So Sydney and Melbourne, you can see represented here, Melbourne and then Sydney, and that's the five, that yellow line there is actually the five capital cities average across the board. Now, Perth is one that's a bit of the outlier. It's actually still improving, whereas Brisbane and Adelaide are just sort of plateauing a little bit there as well at the moment. Now, we could expect that to continue to plateau over the Christmas period. However, I actually think the reverse is going to happen. I think as of today, now that the RBA has decided to keep that cash rate on hold, I think that we might actually see buyers re-enter the market and get in there over the Christmas period to secure a property. And I'll get to the reasons why I think that soon. And here it starts. So looking at the number of properties that are around the market for sale, and I'm just going to focus on Queensland. So Brisbane here, you've seen new listings increase by negative 0.6%. So still down on this time 12 months ago. Total listings definitely down on this time 12 months ago, 16.9%, I think that says. So 16.9%. So the supply issue is certainly being noticed, and that's across most areas. Some areas aren't facing that situation, and certainly supply seems to be right up there. And that's mostly our capital cities. So Sydney, Melbourne, and then you've got Canberra over here as well. The property prices that are really booming, Adelaide, we're seeing strong growth in Adelaide areas. And I think it's because Adelaide's become the new Melbourne. A lot of people are probably transitioning over to the Adelaide area, still in that similar climate zone. Brisbane, certainly a booming pocket. A lot of growth happening there. The city's changing. We've also got the Olympics coming up, so that's a key influence there. And Perth, not sure exactly why, I could probably ask some of my colleagues over there, but Perth, realistically, it's affordable. You've got a much more affordable options. And from everyone that I hear that moves there, they absolutely love the area. So that's interesting to see where property supply is short. So that means that's where people are staying and that's where people are going. Migration numbers, certainly 500,000 in the past year. That's really pushing a lot more demand into properties, particularly around the capital cities. And we have seen capital cities growth outstretch regional areas more recently. So a lot of people are going back to the capital cities, but that migrational numbers, most of those migration numbers do focus on heading to the city. Property prices over the years. So certainly if you thought it was down, it's certainly up. Brisbane, a phenomenal 11.7% year on year. Now, this is the situation with the housing supply issue that is expected to last a number of years. Some experts suggesting in this article that we may see shortages last right up until the end of the decade before those numbers get back on top of things. The Albanese government had a target of 240 homes this year. It's down to 164,000 homes, which is about 80,000 less than their target. And, population is much higher than that again. So it looks like we're not going to keep up with the demand of property prices moving forward. This is the house line. That's the unit line there. So you can see dwelling approvals are on the down. And this is a really interesting one here, I thought. The red line indicates population. So obviously through COVID, population dived, and now it's right back up there. And this blue line is dwelling approvals. So whilst population is going in one direction, approvals seem to be going in the other direction. And really, that's a wrap for me. I think it just goes to show that It is a bit of a challenging market with that cash rate being so high. Buyers are showing more caution, and rightly so. However, because there's just not a clear indication of supply issues being overcome in the near future, I think that property prices will still nudge up slightly. Properties will remain on the market for a bit longer going forward. I do believe that into next year, and property prices will climb a bit more, maybe not as much as they did this year. But one thing's for sure is that people that are buying, and there are buyers out there with those numbers coming into Australia, there will be people buying. And if you present a property well, you will get a good result. So look, that's my take on the market today. Hope that is of interest to you. If there is anything I can help you with, please give me a call.